Welcome to Daily Drive for Thursday, July 3rd, 2025. I'm Jamie Butters, Executive Editor of Automotive News here in Detroit.
And I'm Kellen Walker in Las Vegas. Today on the show, EV brands diverge, who's up and who's down. The clock is ticking on trade deals, and a record number of car buyers are paying $1,000 a month. Plus, retail tech provider Pinewood Technologies Group, backed by Lithium Motors, prepares to install its system throughout the biggest U.S. dealership group.
In Q1 and Q2 of next year, we'll start doing slow, targeted implementation and rollouts with a full rollout implementation starting in the second half of 2026.
Let's run through all the news you need to know to keep up in the auto industry.
Lucid Motors' second quarter deliveries jumped 38% from a year earlier as the electric vehicle maker ramped up production of its new three-row crossover, the Gravity. Vehicle deliveries reached 3,309 in the most recent quarter, up from about 2,400 in last year's second quarter. Lucid said production at its Casa Grande, Arizona factory jumped 83% in the quarter to 3,863 vehicles. Those results contrast with bigger domestic EV specialists. Tesla's global sales fell 13% in the quarter in the wake of CEO Elon Musk's polarizing politics. The Austin, Texas-based company sold 384,122 EVs in the quarter, down from about 444,000 a year earlier. Cox Automotive estimates that 130,000 of those were delivered in the U.S. Also, Rivian Automotive's EV sales fell 23% in the quarter to 10,661. Despite the sharp decline for its two consumer vehicles and commercial van, Rivian said it still expects to deliver 40,000 to 46,000 vehicles this year.
Looking at overall U.S. light vehicle sales, the spring surge is already giving way to a summer swoon, as tariffs are seen exacerbating affordability concerns. Deliveries in the second quarter rose 3.4% from year-ago levels, according to the Automotive News Research and Data Center, mostly from pull-ahead sales in April and May. Industry sales fell 4.3% in June, Global Data said in a preliminary report, marking the first month this year the market has turned negative. In another sign, a cool-down is underway. The seasonally adjusted annual sales rate in June was 15.65 million, according to a preliminary report from Motor Intelligence. That's the slowest sales pace since January.
As Americans roll into this 4th of July weekend, a pivotal week looms for global trade, as President Donald Trump's 90-day pause on the so-called reciprocal tariffs is scheduled to end on July 9th. The end of the pause could have significant ramifications for the auto industry, even though it applies only to the reciprocal tariffs that Trump announced in April and not to the sectoral levies he placed on vehicles, parts, steel, and aluminum. The autos and metals tariffs have been major topics of discussion and negotiations between the U.S. and many of its trading partners, and broad trade deals with those countries could include adjustments to those duties. That was the case with a deal the U.S. reached with the U.K. in May, which implemented a quota and reduced auto tariffs on the first 100,000 British vehicles imported to the U.S. each year.
Nearly 1 in 5 new car buyers in the second quarter committed to a monthly payment of $1,000 or more, according to Edmunds. The record share is now 19%, up from 18% a year earlier. New car buyers also set a record in the quarter for highest share of loans with terms of 84 months or longer. Roughly 22% of buyers who finance with a loan signed up for that extended term, up from 18% a year ago. Ivan Drury, Edmunds' director of Insights, said tariffs have had little impact so far, but won't make vehicles more affordable in the coming months. And those are today's headlines. So, Jamie, it's been an interesting quarter for EV sales. What are your thoughts on the results?
It just goes to show product is king, right? And there's no substitute for new product, new attractive product. With Tesla, really hasn't had anything for years other than the Cybertruck, which has kind of been a disappointment, although I feel like I see them everywhere. They're just so distinctive. They stand out every time, everyone that's on the road. But Tesla's been kind of on a slide, really focusing on robo taxis rather than its growing its car business. Rivian hasn't had much new to show. They're trying to get more efficient in their production, but have had some stumbles and challenges in the market. For Lucid, they're the smallest. They're going from one vehicle to two, but adding a crossover probably should have been their first vehicle in the first place instead of the sedan. That's just where the U.S. consumer is. But they've got a very attractive crossover, and it's getting some traction. It's at least getting out and going, and it's offering them some chance for some growth. So we'll see more growth if we see more new models. That's extra true with EVs. That's been what we've seen as we follow that data month after month.
Gotcha. Coming up, how a retail technology company looks to capitalize on a change to its ownership. That's next on Daily Drive.
Daily Drive listeners like you have access to the lowest price for Automotive News Congress 2025 on September 11th.
The event is where the industry's biggest players tackle its toughest challenges. Congress attendees don't just follow the industry, they lead it.
This year's featured speakers include Hyundai Motor Group Executive Chair Yusin Chung and General Motors CEO Mary Barra.
We are investing in America. We're creating jobs. That's creating IP in this country. And I think, the United States needs to lead in key technologies.
Join us to gain the insights and connections needed to steer your business through massive change.
To get the lowest price for the event, go to autonews.com/events, select Auto News Congress, and type in the discount code Daily Drive, one word, all caps. We'll see you in September in Detroit. Welcome back to Daily Drive. I'm Jamie Butters with Kellen Walker. The market for dealership management systems has gotten pretty dynamic, with cloud-based startup Tekion taking on established giants CDK Global and Reynolds & Reynolds. Now another cloud-based tech provider, the CEO doesn't like to think of it as merely a DMS, is entering the North American market, backed by the largest dealership group in the U.S. I asked Pinewood Technologies Group CEO Bill Berman about Lithia's investment, the recent rearrangement of that equity, and the competitive dynamics in North America. I reached Bill Berman in London, England. Bill Berman, welcome to Daily Drive.
Thanks, Jamie. Nice to talk to you again.
Great to have you here to help explain important capital transaction. Last month, Pinewood Technologies Group and Lithia Motors announced a transaction. Pinewood would buy out Lithia's 51% stake of their North America joint venture using Pinewood's own stock. So it wasn't about cash changing hands. It was just rearranging the ownership structures of the parent company and the North American unit. So why was that important?
Well, Jimmy, if you go back to when Lithia bought the assets from Pendragon, the dealerships based in the UK, as well as a small parts company, a distribution company, and a B2C leasing company, the one asset that remained was Pinewood. And it was something that Lithia was really interested in. But in the context of the deal, it just didn't make sense on that end of things. So what we did through that deal transaction was make a joint investment in going into North America with the Pinewood Automotive Technology platform. And Lithia has been great proponents of it. It's in all of their UK stores. They're ecstatic with the performance that has helped them in their business, and it brought a lot of cost savings as well. As we look to go into North America, though, and we started to get proof of concept and show them that the product would also work in North America, we were kind of confronted with a couple challenges. So in days past, in the old Pendragon days, one of the challenges with Pinewood was because it was owned by a competitor, some of the larger dealer groups and stuff just didn't want to be giving a competitor, money to be able to sit here and help them do their business.
Sure.
And to make sure we didn't have that same type of an issue with Lithia in North America, and to make sure that one objection could be taken out of the kind of the conversation collectively between Lithia and us, we decided to do this. And we thought this was a unique way to do it. Lithia didn't necessarily need any more cash. They're highly profitable and cash generative. We needed our cash to be able to go into North America and the such. So at the end of the day, it was a great opportunity to sit here and get them a little better investment in the current Pinewood PLC, publicly traded company on the LSE, give us full control of North America and our go-to-market strategy there, and then take out that one, potential kind of hindrance that might prevented us from a smooth you know install into North America. And the best part about the whole thing, Jamie, is we just had our AGM on Monday, and our shareholders voted over 99% voted for the transaction. So you can't get 99 people to disagree on something, let alone to get literally 100% of our non-Lithia shareholder base to support the transaction. So Lithia was happy. We're ecstatic about it. Our shareholder base think it's the right thing to do, and we're just excited about taking the product to North America.
I mean, it sounds like the right move. I guess, was it a mistake to have structured it the other way in the first place, or were there benefits to Lithia having that majority stake to get going?
I think initially, just because some of the challenges with the way the deal had to be structured from some outside influences and the such, I think Lithia just wanted to make sure that the product was viable into North America, make sure that they could understand what was going on with it. They have been nothing but great partners in the UK, great partners in helping us get to the point where we are in North America, and they're our largest customer and our largest shareholder. So working with them has been nothing but positive, I think, on both fronts, especially for us at Pinewood. You can always second guess, but at the end of the day, I think we came out with a very ingenious way to sit here and facilitate what we need to do. We've got control of North America. They're happy with the progress and the product that's going to be rolling out soon. And at the end of the day, they got a great return on their investment, and our shareholders are happy. So, everybody right now is happy, so that's always a good thing, right?
That's pretty rare.
Yeah,
So,
right.
what does the North America operation look like, and where are you in the Lithia rollout? I mean, it's 300 plus stores, right, across the U.S. and Canada.
So we put this out in the prospectus that we did for the transaction, but we're going to be piloting several stores this year. We can't get into detail, but with a non-Lithia entity, we already have operations up and running in North America right now, and the product on the accounting and the service portion of the platform is working flawlessly. So we're really excited about that. In Q4 of this year, we'll be launching in 2 Lithia stores and kind of a proof of concept, but we've already kind of done all the work behind the scenes and tested it out. So we have 100% confidence that that's going to work. In Q1 and Q2 of next year, we'll start doing slow, targeted implementation and rollouts with a full rollout implementation starting in the second half of 2026. Now, a lot of this goes on the pace that Lithia wants to be able to go on this. Obviously, they have different contracts with different providers for different aspects of automotive technology that we support. So we'll be working through some of those things. In a perfect sense, it'll be anywhere between 18 months to as far as a 24-month rollout schedule. But right now, that's really kind of up in the air and more based on conversations between Pinewood and Lithia. But we've proven that the product works in North America right now. We're testing within Lithia stores the end of this year, and we look to start full implementation middle part of next year.
And so, did you say that you actually have a non-Lithia store in the U.S. already that's using the Pinewood system?
In North America, yeah, but we
In
can't
North
get
America.
into detail about it. But it's only using the service and the accounting platform right now, and they're very, very happy with it.
Okay. So to the extent that dealers might have been wary of switching to a Pinewood system if the largest dealer in America is the majority owner of that, how confident are you that the change will be effective, that they'll care about, sort of those nuances of the ownership structure? Are there precedents for this kind of a move being successful?
Yeah, if you look at it, there's various companies. Some have ebb and flowed and come and gone. But I think at one point in time, Lithia had a large investment in Shift. I think AutoNation and several others had some investments in Vroom. If I'm not mistaken, I think AutoNation's got a sizable investment in TrueCar. It's not the exact same thing as on the technology side of the business, but you have lots of retailers that have made investments in different things that other dealers are utilizing. I think since we're a publicly traded company and Lithia has a shareholding in us, that's no different than any other investment. They don't control the direction of what we do. They don't have access to our tech stack per se, or any data or any sensitive information about any of our customers. It hasn't limited us in the UK being able to grow our business. So we think that this should cause no issues for North America, nor like has it done in Europe.
I mean, it is the largest shareholder, but it's a minority shareholder, so therefore they don't have that kind of control and
No,
privileges.
it's no different than any other investment in any other company. Hopefully, we keep doing what we've been doing, keep driving the returns on their investment in the company, keep growing the company. They get a nice return on that piece of it, and at the end of the day, it gives us a good financial backing to go forward with it. I actually think it's a positive having the biggest automotive retailer in the world having a large investment in backing us going out there to do this. There's worse investors to have on your register.
So tell me, how do you look at the North American DMS market? What are the unmet needs of US dealers, and how can Pinewood AI stand out and make it, worth the work to change systems?
Well, I think it's a good question, Jamie. And I think what you'll see with us is I hate using the terminology DMS, dealer management system. It's become more associated with an accounting platform than actual a real automotive technology ecosystem or platform to be able to work off of. Unlike some of the incumbents, we have a enterprise level accounting stack, which is great. It's robust. We have the same code stack throughout the world. We're in 22 countries now, so we know the system works. It's language agnostic, so we can operate in multiple different languages, even within a store. But the real power of our system, of our platform, is being able to have vertically integrated products where you don't have to have the need for as many of the layered apps as you have in North America. So if you go off some of the incumbents, you have somebody doing CRM, somebody doing F&I menu, somebody doing after sales. You have multiple different things supporting different accounting functionalities. Not counting your OEM integrations and this such. And if you're a sales manager or you're in the service department, you're working on 10, 12 different windows open at the same time, trying to bounce through. It's not a really fluid system. It doesn't give the end customer, the retail customer, a good experience overall. It's disjointed, it's clunky. And our system sits here and gets rid of almost the entirety of that. You're always going to have those factory integrations and a couple things you have to do outside of that. But within our ecosystem, our platform, you can facilitate 95% of a sales service transaction without ever leaving our one entry point. So it gives much better end user customer, retail customer, the people using it in the stores. The real thing here is because of the way the system is structured, we're able to reduce the number of non-revenue generating, non-customer facing people in the store and provide tremendous amounts of savings, generate additional opportunities for being able to get higher productivity, more efficiency for an overall lower cost of operation. And so on a like-for-like basis, dealers can come in, buy our product, get a better end customer experience, easier, more useful opportunity for their actual employees to use it for lower overall cost of sale with a higher productivity at the end.
What does Pinewood look like in North America and globally? How many people are we talking about? What kind of locations are they in?
So we're quite spread out. We're in 22 countries. Our head development office is in Birmingham, England. Our head office is in London. We just opened up our U.S. office in Fort Lauderdale, but we also have resources on the West Coast. Our AI technology stack is based out of Dubai. We have an office in South Africa that facilitates all of our stores in Africa. We have an operation in Tokyo as well to be able to handle all of Southeast Asia and Japan as well.
Wow, that is really spread out. About how many people are we talking about?
We have about 300 people in total. If you count all of those locations, maybe just over 320 people in totality.
So you're in London. As you look at the US and Europe and the world, what's your view of the auto industry's health and outlook at this point?
Everyone's been talking about, I've been in automotive, I'll just say 30 plus years, just to keep it at that. And I've watched everything, the franchise system is going to go away. Back in the 80s, it was going to be brokers. It was going to be the big box retailers like Costco, which have done nothing but add to, the retail market and the business. The internet was going to displace it. Direct to consumer sales, like what Tesla has and some of the new entrants into the EV markets. Car dealers and car people are resilient and they find ways to sit here and succeed. I think what and this, maybe it's a little self-serving, but I think what you're starting to see and what's starting to come to market is where technology now is really going to start to play an important role in the automotive journey, both from the OEM side of the business, the in consumer user, but most importantly within the dealer side of the business. And I think technology like ours that can help reduce your costs, bring higher productivity, give a better user experience to the end customer. I think these are the things that are going to really make a difference going forward. I think once we get through some of the turmoil right now with the threat of tariffs and that piece over the next couple of months, I think things will settle back down, and I think the car market is going to do nothing but keep growing. I mean, if you look back, Jimmy, you and I have been in automotive and adjacent to it for decades. It's resilient, and they keep growing, and they keep getting better and better.
It certainly is a resilient industry. Bill Berman, appreciate your rosy view from a company on the move. CEO of Pinewood Technologies Group, thank you so much for joining me on Daily Drive.
Thanks, Jamie.
That's Daily Drive for today. I'm Jamie Butters.
And I'm Kellen Walker. Thanks to Lawrence Iliff, Michael Martinez, David Phillips, John Irwin, and Paige Hodder for their reporting for today's podcast. You can get the latest news on retail technology, EV sales, and everything happening in the auto industry at autonews.com.
We'll be off tomorrow for the 4th of July holiday, but come back on Saturday for our Weekend Drive edition of the show. I'll be talking with automotive news staff reporter Mark Holmer about generative artificial intelligence and why it continues to struggle with hallucinations.
It has hallucinations, which is sometimes it gives nonsense answers or it gives wrong answers.
We'd love to hear from you. Let us know what you think of the show and the topics we covered today. Send us an email at dailydrive@autonews.com or leave us a voicemail at 313-444-2774. And if you enjoy the podcast, remember to like, leave a review, and subscribe so you never miss an episode.